Good morning, everyone. Morning, morning. It is Wednesday, July 31st. Hope you're all doing well. The Fed hasn't even spoken yet, and the market's up super aggressively. The markets are up like Nasdaq's up about like 600 points off yesterday's lows. The S&P 500 is up over 100 points from yesterday's lows. Right, the overnight just gargantuan movement to the upside. All the bottom callers are super happy with what's going on, and we'll see, right? Yesterday, Microsoft earnings kind of fumbled. We had a strong decrease in Microsoft earnings that initially brought markets lower. AMD reported some pretty solid earnings, which helped Nvidia uh, make a pretty solid move up. And now we have the Fed this afternoon. For about a year, the refrain from the refrain has remained the same. The Fed doesn't expect policymakers to adjust their benchmark interest rate when they meet on Tuesday and Wednesday. It's a two-day event. And this may be the last time that chorus is heard, with today's gathering likely to be the final meeting of the cycle that the FOMC leaves the rates unchanged and on hold. So, a plurality of Wall Street, the breakfast subscribers, see the central bank cutting rates for the first time in September. It'd be quite the farce if we see a Fed rate cut today, right? Markets are probably going to be short term, just giga bullish. And we've seen, right, a very strong overnight rally as such. Now, compared to any of the other meetings, there have been no policy changes, and this is what's expected today. We're going to see how those colors fly realistically. And if there's one big character trait of Jerome Powell, it's that he doesn't like to surprise, right? So it's pretty unlikely that we'll see a kind of shocker rate cut today. The chances are, like, you can look at FOMC, the Fed Watch futures. We'll pull this over here. So for today's meeting, there's a 97% chance that rates are going to remain unchanged, right? As opposed to, if we look at September, the September meeting, we see that there's about an 88% chance that rates are going to get cut. Now, unlike at today's press conference, he's only likely to telegraph his views in the coming weeks after feeling fully comfortable with economic data such as PCE, CPI, non-farm payrolls, and so on. So we believe that Powell will wait until the Jackson Hole end of August to deliver the explicit September cut signal. Evercore ISI Krishna Guha wrote in a research note, the Fed leadership is proceeding methodically to build the case for a cut, and internal consensus as the game plan for subsequent moves. So Q2 GDP came in strong, stronger than expected last week. Labor market trends will likely remain key, as Powell emphasized in recent comments. The risks to the Fed's dual mandate of price stability, meaning 2% inflation, right, the general target, and maximum employment are coming into better balance. Some even think that the Fed chair will say that the two sides are now balanced, which is a big change from the start of the year when the risks were mainly focused on price stability versus labor. Easing labor market conditions also mean that there's a reduced chance of large wage hikes that can reignite inflation. So we'll see how that shapes up. We're going to be trading it live in our room this afternoon with a specific trading strategy. You can find it on YouTube as well. It's in one of the videos that we've posted. But the expected move right now, there's a lot of volatility in this. We'll see what happens. If there is a surprise, which is fairly unlikely, right, it's going to be a cut, and that's going to bring short-term, like, giga bullishness to this market. This thing's probably going to erupt, limit up maybe, who knows. So while the Fed is inching towards the rate cut cycle, the Bank of Japan is also moving in the opposite direction. Overnight, the BOJ raised its short-term key interest rate to 0.25%, the highest level it's seen since December 2008. And the announced plans to have its bond purchases until March 2026 to ensure market stability. The move underscored efforts to normalize monetary policy after years of negative interest rate policy, and that ended in March. While economists expect one more rate hike this year, Bank of Japan Governor Kazu Ueda said that this depends on whether the economy and prices move in line with its forecast. Now, the big topic of conversation, well, not the biggest, but one of the big topics of conversation, Microsoft, which has pretty much eliminated all the loss. At one point, it was trading under $400 in the after hours trading session from its earnings. So, speaking of divergence, right, another round was seen in the latest earnings influx on Tuesday. Microsoft AI-fueled cloud division grew less than expected despite the tech giant beating revenue and earnings per share estimates. While there was a lot of talk about the AI product suite, there were also comments highlighting constrained AI capacity and assets that will be monetized over 15 years and beyond, prompting shares to fall 2.8%. Currently, right, which is nothing. It was down much more in the after hours session, right? From that close, we traded about like down 6% or so yesterday in the post market trading hours. So all the big capex spending will still boost data center supplies, and indeed those benefits were on display in the other earnings. During the post-market session, AMD also soared like 7.5% after hours. AMD is one of the things that was helping, Nvidia gain some ground after yesterday's move down to about $100. So AMD reported some impressive quarterly numbers, and the results even boosted Nvidia, right, which pushed NASDAQ futures up 1 billion points. This thing is up in the freaking skies right now. So in terms of that, right, that's mainly the news that we're looking at to start the week, start the day today, as we have a pretty big event that's coming up. Now, these markets, right, let's take a look at what went on yesterday in the overnight, because this is some outstanding, just like turbo bidding happening, right? Like Space Monkey. What if the rates rise today? If they hike, oh my god, this market's gonna drop like 200 points limit down. I highly doubt that's gonna be the case, but like, you never know. Just not necessarily looking at a surprise rate decision today. Overall, right? Mainly just looking for things to just hold stable and as is. So with that, we have a pretty strong market rally, right? Even after those like Microsoft earnings, things are looking very, very bullish. You can see from yesterday's lows on the S&P. From yesterday's lows on the S&P, we pretty much printed a low around like 54, like 33 or so. And markets just rallied. We're now up 112, 115 points from those areas. That's some big business, right? So we've accepted the ES into the distribution above. We finally broke the 53.30 area, 35 area. They've finally done it, right? Congratulations to the buyers. They tested it 3 times. We failed. We couldn't necessarily accept the distribution to the downside. So what do we have right now? A massive rally, and these guys are holding out extremely well. So what it is that we're looking at, right? These markets are just continuing this upside momentum press. I have an area here to watch at 55, 53 to like 56 area on the S&P to see if they want to kind of sell it. But realistically, we're making moves towards the top of that distribution, which finds itself at that 55.60, 55.65. That would be like a very big target for these buyers to go and get to, and then we'll see kind of what happens. I don't imagine, like, this is kind of what I wanted at the beginning of the week. I want to see that rally at the beginning of the week shape up so that we can find better sellers at higher levels. And I'm still looking for something like that. Obviously, during the Fed event today, we have a lot of unknowns. Realistically, we have to see how that shapes up. But all in all, it's going to be very hard realistically selling this market and trying to be on the bear side of all these things. I'm mainly trying to look at this from the bear perspective if we start moving back under this like 35 area on the S&P. So like a 10-point move to the downside can kind of start the wheels on that. But generally speaking, it doesn't necessarily get bearish until 55.25 area breaks. 55.20 had a massive negative delta on the overnight, right? You can see it on this DOM over here if we scroll a billion points lower. 4,000, and it's been holding as a massive support zone to kind of just sustain this bid that's been going on, right? People getting trapped into that area. So realistically, if we fail through the distribution lows down towards that 55.20-25 area, that's what's going to make for a potential short. Otherwise, things aren't looking that sexy for these shorts, right? Things aren't looking super attractive for the sell side to come in unless we trade other areas that are higher towards the tops of these distributions. So that's what I'll be looking at today on the S&P, taking it step by step, because we've seen this massive overnight move, and it'd be pretty interesting to see if we can actually reverse it. I'm not super keen on looking at this as a potential bottom in these markets. I would like to see maybe the Fed shake things up, but there could be a little more upside before we find any of those sellers. The momentum's still strong on the buy side. These guys are super happy with what they've done, so we gotta give like hats off to the buyers at this point. But we'll go from there. Damn, my camera froze. Anyways, check us out at TradeProAcademy.com, and I'll see you guys tomorrow after the Fed. And if you want to join us, we'll be trading the Fed announcement live today in the afternoon. So again, check out TradeProAcademy.com.